Eric Muadhi with Muadhi.com. As we begin the new month, as you can see, this is March 1st, 2016. So want to take a look at those mining and gold, silver, and miners sector of the market. And now we go back to my trepidation, and my suspicion that this might actually be a trap. And now if you take a look at all these charts that we were following and I've been following, gold was and does look like it was breaking out as of yesterday. For example, if you take a look at the GLD, which as of yesterday was attempting to break out above 118.36. Right now it's back below that level, so this breakout is now, maybe not. It's only Tuesday, but the breakout here could be failing. And so I go back to the long-term monthly chart, and I just was never really sure. In fact, let's take a look at the GLD monthly, and we can see, yes, it does meet the minimum requirements in terms of a potential breakout for a nice move higher. Yes, and that we have to acknowledge. This is the potential to move to 3-year highs on the RSI, potential to stay at 3-year highs on the MACD, and also moving above zero. So those are very strong indication that if it successfully breaks out on the GLD above 118.36, then we really have to respect the potential for upside. But I had a suspicion, and I did express this, that maybe this is where gold stalls. And this is just going back to the uniformity principle, because if you take a look at the monthly chart, you see that all the charts that I'm going to share here have a similar looking look and feel. In other words, it seems like they are going to struggle around here. Take a look at gold, long-term monthly chart going back to 1990. If you take a look at this break, now that break was instrumental for bringing the market off the lows there, or bringing the market off this level here in 2013, which is this drop. And of course, we haven't been back to those levels. And I think the key here is that gold closed at 52 end of February at 52.21 after staging almost an 11% gain for the month of February 2016. I suspect this month that if we fail and gold moves back below 50 after closing above 50, if we move back below 50 here, this is where you're gonna see gold stage a strong reversal, and which might actually agree with my thesis here that if gold stalls around here, this is where you want to get out, because the next move, and it's going to be a meaningful move for gold, is probably going to be for gold to trade lower substantially, because as it moved above 50 on the monthly, you had a big gain. If it moves below 50 in the coming month or months, that might suggest that this is where it absolutely has a strong reversal. Now, even on this chart, we can see what happens when you get this sharp support at the 50 RSI level. You get nice re-entry. So my suspicion here is we might get a sharp reversal at the 50 line, which might suggest somewhere around here where gold was trading as high as 1265, 1263 there, that the next swing trade might be lower. And that to me is the big risk as far as gold is concerned. And if we take a look at the other charts, for example, keep in mind that the gold chart, let's go back to that gold chart, so bear with me here. So the gold chart on the weekly, you can see here gold needed to hold. Yesterday it was doing its best to break out and trade above the previous recent weekly closing high after 2 weeks of rest. You can see these 2 red wicks here and here. That's all you need, 2 rest period weeks, which is the minimum requirement. So gold needed to be above 1238.50. It closed at 1239. Right now we are looking at gold, which is trading, so let's see whether we can get this on the, right now we are looking at gold which is trading a little bit below that here. So gold trading right there at 12.21. So it looks like it's failing in my opinion. Anyway, so the risk here in my opinion is we get markets that are now gonna give us the exact opposite. And just to show you one of the reasons why we were suspecting that maybe around here we stall is if we take a look at the silver chart. In fact, silver going back on a weekly, let's go back about 5 years on a weekly chart for silver so that I can get that here. And all this is just me trying to explain why I personally have not been very I have not warmed up to the gold trade, because silver already gave us a sell signal. If you take a look at this level where this line, the red line, where it has been stalling, we see clearly that this is where one could expect a pullback based on previous resistance levels on this red line. This red line has been absolutely critical in stalling any movement in the gold minus silver trade. Here we have uniform activity above the red line, back below it, so that's a trap. Here we have the break of this trend line. So a lot of things here point to my suspicion. So there's a trend break there which gave us this red line and which also began this move. In other words, we are potentially looking at silver already giving us an early sell signal. So I've been very cautious here. Now I want to share with you the chart, because as I look at the long-term picture, all these charts, even individual gold stocks, for example ABX, you can see that coming back here. If we take this break line around the 50, it closed above 50 last month. This month it's moving below 50 right now, the first couple of hours of March 2016. And so this is becoming a problem here in my opinion. I think this is now being confirmed as a uniformity resistance. So I think that maybe the gold stocks are poised for a major pullback this month. Take a look at this other stock here, AEM. There was a break here which is off the highs there. We can draw a line from this break. You can see that again it's coming into play. Every time we hit that level there, we stall. We hit that level there, we stall. And so on a monthly chart, lots of sell signals on all of these charts. Take a look at another one here, and all of them are the same. All of them without fail, pretty much. Here's another AKG, and this one is also closed above 50 in the last month, had moved substantially, now might coil back below 50. That's why I say that we have to be careful here with the gold trade. Take a look at AU, break here in 2012 off the highs there. So that break right there corresponds with this break. We draw a line from there, closed above 50 in the last month, had a nice move the last 3 months, moving from under $6 somewhere in that range all the way to $12.50. Nice strong move, but now with the potential of coiling back below 50 might suggest the idea that that could lead to a major drop. Take a look at another stock here, and this one is failing to move above the break point. You can see that there was a break here in the RSI on the monthly, which began this move from $8 all the way to $1.50, and now this could easily become a stall point again right there. So I see a lot of reasons on the monthly charts here to be very suspicious of gold, and that potentially the next strong move in gold is going to be low. Here we are and all these are monthly charts. Taking a look at another gold stock. For some reason it's coming back to test this level here. I think it stalls, and if it stalls, then this is where it starts pulling back, and it pulled back substantially. It might. We take a look also at, for example, the DGP, the gold ETF, double long gold. There was a break there just under 50. That break began this move here. We haven't been back to those levels. We draw a line from that which is just slightly under 50, and you can see as of right now this is becoming a problem. It is about to coil back below the red line with uniform action, which might suggest why this could again be another instrument suggesting that gold struggles. Take a look at DRD, which has done substantially well in 2016. It's very hard to see this on this long-term monthly chart, but let me show you that on a smaller time scale. This has been on fire. Let me try that again. It's been on fire the last couple of weeks, moving here on a weekly chart. In fact, let's take a look at a 2-year weekly chart, and you can see it moved from $1.10, somewhere in that range, all the way to $4 over the last 6 months or so. It's had a fantastic run. For 2016, it's moved from $1.60 all the way to $4. So a substantial move. Now the problem is it breaking out or is it not? But you go back to our monthly chart, you can see that clearly it is coming back to stall where it has been stalling over the last 14 years or so. Right? So again, stalling right here. If it turns down for the month, that's a major resistance, which also corresponds with this break going back to 2013. Draw a line from there. Those two lines end up on the same spot. Now, as if that is not enough, if you take a look at the RSI highs, and remember, I am doing this because I had to do some in-depth look at the sector to see whether there was a reason to play that sector. And I just see here that, again, if you take the top side, if it turns down for the month, right now it's up 2%, but if it turns down for the month, this is going to be resistance, confirming again that it is showing resistance on the top side RSI. So lots of sell signals in the space. Take a look at GDX proper, GDX itself, the mining ETF on a monthly chart, all data. Draw a line extending like that. You can see that it broke through this line here, and now off the highs there in the 40s, now coming to back test this line. As of right now, I have to say that my suspicion that this could actually stall are starting to play out. And we can also see that this is now back test failure on that blue line. It is also rejection at the RSI 50 level. The last time we had uniform activity rejection at the 50 level was here when the GDX was trading at 52, 51 in the lower 50s area. So lots of sell signals on this ETF here. Here's another one, GDX miners. This one has turned down for the month. You can see there, if you take a look at this line, that's a problem there. Actually, you can even, if you want to do it right, is just figure out where it broke down, and I'll show that for the sake of explaining where the lines are coming from, because sometimes I do confuse you. There was a break there, that break, slight break in 2012, so 2012 somewhere around there. And if you draw a line from there, you can see right now it is coming in contact with the same level and showing resistance. So early on in the month, as long as we continue showing these resistance levels, I personally think that this is where we start seeing gold stall. Another stock here, GDX or GFI, break there at 12. And the more we look at this sector, the more we see that this was resistance once before in 2015. During this period here at $6, it would go on to trade as low as $2. Right now we are seeing here again, so this was resistance here for the highs there, and now we are potentially showing resistance on that red line. And if we turn down and move below 50, as we are doing right now, we closed above 50 for the month of February 2016. Now we're already turning down and moving below 50, suggesting that this could end up being just like this period. Resistance at the 50 level might suggest the next major move in gold is potentially even lower. Take a look at the GLD itself, and of course the GLD is going to reflect gold. We can see an example of uniform activity support at the 50 level. Uniform activity support here for a major low before moving on to major highs, right? And here we see that once we broke through 50, so there was a line here, we broke through it. Once we broke through 50, did not hold, we came off the highs there, and now we are coming back to test the same level, which is around the 50 level. And if we turn down for the month, right now we are at 51 on the RSI. After closing above it, if we end up being below 50, we are going to suggest a big down month. Keep in mind, gold had a big up month last month, the month of February, as it moved above 50. Now the potential for moving below 50 might suggest a strong month down. In other words, it would make sense maybe to even short gold around here if all this plays out. You can also see here there's a line here connecting RSI highs. I guess let me draw them from the highs there. This is the most RSI high level there, and right now it's slightly above that, but I'll show you where it's been showing resistance. So let's move all that stuff. And remember, when you're drawing these lines, you wanna use the chart itself to tell you how to trade it. In other words, we should not have preconceived notions on where to draw the lines. We should always let the chart guide us. Stocks behave slightly differently, so every chart is going to be a little bit different, but the key is to understand what's going on. So here we find out that this is the high. We see where it broke down on the RSI. The break took place right there, beginning of 2012. So this break in 2012 beginning was off the highs, actually off those highs there, excuse me. And then the stock tried to move higher. So we can see that what happened here, we made a lower low on the RSI, which is negative divergence, while price made a slight higher high. Another way of looking at it is we try to break out above, let's call it 112, and eventually failed. So eventually we moved back below the red line for a sell signal there, which corresponds with this negative divergence. Now if we are looking for RSI rejection line, we can see that there was an RSI break there, which was this break point there, and then we can draw a line like that. Without any type of adjustment, we can see that uniform activity above the red line and back below it for this major high, major sell signal, and right now the same line is acting as resistance. That's why I'm leaning towards a market that could struggle here. If we take a look at another, remember I'm just going through all my charts here these are stocks that I was watching for a breakout, but now I'm turning bearish on them because of the way they are trading. Here we can also see that if we take a line here, again resistance on that red line there for the highs there, and now coming and making contact with that line. And you did not draw that, I did not draw that, the market did that on its own. Take a look also at this other line, which is the line connecting RSI highs right there. And you can see that again coming in contact with that level where the market is trading right now. Now let's just take a look at some more here, and what I'm gonna do here is probably just go through the charts. If you want to pause the video and try and analyze why they are stalling, that's okay. Here again, hope you can see where the RSI is showing resistance based on previous RSI failure point, and I'll show that broke down somewhere here. So that break began this slide here, and we can draw our uniformity line, horizontal line right there, and it is coming exactly in contact with that level. Let's take a look at another. And here, I hope you can see the break point in 2011. You can draw a line from there. If it moves below 50, it stalls. Take a look at another stock here, potentially showing resistance around the 50 from this break line somewhere there, which of course began with this break. So as I was looking at the sector for ideas, what I see here is the potential for a major reversal. Even here we can see NG, which has had a nice run over the last couple of weeks, coming and showing resistance at this break line. So there was a break line there in the RSI in 2011, brought the stock here, broke the stock from the highs there, draw a line from there, and again you can see that it is showing resistance right now exactly on the line. So yes, it's at the beginning of the month, but you can see here I'm just repeating myself over and over again. Here's another one showing resistance, and another one showing resistance. The stock has had a nice run from $1 here in 2014, right now at $5, or recently from about $2.50 towards end of last year, and now early this year trading at $5. So it's almost double in the last couple of months. But you can also see that even this one, if you take a look at where it came off the highs here from 13 all the way to $1, Now if you draw a line from this break line, it is already showing resistance on the line. So we are seeing some synchronicity, some synchronized action on this, all of these ETFs. Is another one here. Hope you can see why it's stalling around here. And all this to say that if you are to be a neutral, this is where this thing stalls. Even this one, which has had a nice run from $4 late 2015 to $14, that's a major move. But you can see here, if you draw a line for where it broke down on the RSI, and I know it's hard to, here it went to fresh lows in 2014, which brought it off the highs there, and then it came back and tagged the red line, which was the highs there at about 11. It's coming back and tagging that red line and seems to be stalling, which might suggest again the highs could be taking place here at 14. The next potential swing trade, in my opinion, could be lower. Let's take a look at UGLD, and this is a gold ETF, 3 times long. Just want to let's go back and take a look at this thing. This is all-time data, but I want to take a look more closely. Let's go back 6 years, and so 6 years probably too much. Go about 5, and I'm about to end the video. So all right, so this is all data on this chart, and we can see that here this is coming back to tag the highs on the RSI. If it can't move above this in the current level, it might stall. I want to take a look at the weekly, and the weekly here coming back to test this previous high right there, and as of right now showing early signs of stalling. So all these charts do point to the fact that maybe around here we've seen the best of gold, and potentially the next swing trade for gold is gonna be lower. The key, now we have to go back and be very careful not to assume that this cannot break. The key is we need to see a breakout, and we need to see the GLD hold above the previous weekly closing high. And for the GLD, if it breaks out and stays above 118.36, then maybe one can take a trade for a bullish move. But right now it's below that. We take a look at the GDX. If the GDX is to move higher, it needs to hold above 18.84. It needs to break out and hold above that if we are to be playing part of this trade. Otherwise, right now it's trading at 18.69, so that breakout is failing. And if this is going to be a true breakout in gold, gold proper, the instrument itself or the index needs to be trading above 1238. So it needs to be above 1238. Oops, excuse me. Let's start that over. So gold needs to be above 1238. 1238. Whoops. 38.50. So 38.50. Yeah, it's hard typing with a mouse or writing with a mouse. So you can see here, if it can break out, then maybe we can change our idea. But the charts we've seen point to the fact that if you are looking for some sector representation, if you wanted to play gold, it's looking a little bit like it's turning down, and I think it suggests that we are going to see lower prices in gold. Otherwise, if you already had gold, gold is failing to break out, GDX is failing to break out, GLD is failing to break out, SLV already gave us a sell signal, you need to start taking profits, because potentially, unless gold breaks out, this rally is done, and the next major move in gold is lower. Eric Muadit, muadit.com. As always, good luck, peace, and blessings. E-A-C-S.